Hello and welcome to yet another lively conversation on money matters and conversations with our very own financial professional, Miss Margaret Businje. I today will be your host, Dr. Sharon Wanyuze. I am very happy to see several people in our audience tonight, and even those who will watch this recording later. We are all here to learn together every Thursday. But today, in a special way, is a question and answer. This is the time to answer questions that have been submitted by some of our members, and also just certain cases that have come up during this work. So without further ado, I'm going to ask our guest today. She's usually the host, but she's our guest today to introduce herself, and then we'll get started.
Oh, thank you so very much, Dr. Sharon. It's always a pleasure to be here, to learn with our people, to learn with our community. My name is Immaculate Businje. I am a financial professional. I am a mother first, which gives me more energy to actually put this financial literacy, really more effort on it. I am on a crusade to see that every family, there is no family left behind. Every family, every community is financially educated. So pretty much that's me. Thank you.
Thank you so much. So just to give everyone an idea of how this is going to go, we'll do our introductions like this. I'm going to start with some questions just to get us warmed up. And we'll ask, everyone in the audience here to please have a question ready, if any. And even those who watch this recording, you can always leave your questions in the comments, or if you would like to reach out to any of the people that you heard, we are happy to get back to you. Okay, so feel welcome again. This is a time and a space. It may seem like a formal conversation, but we really are here to learn together. It's not very, cutthroat. So we are here to share ideas. So feel free to bring up personal experiences. I really like what we just heard, that introduced herself as a mom. Sometimes mothers and just people who are studying families, or we can always come up with excuses and valid excuses, like, how can I even think about getting something else to take my money when I already have children that are taking my money? I already have new bills that are coming up, So tonight we're going to learn about how we can make money work for us instead of always be people who cry and can't realize where money is going. Tonight we are going to answer questions and hopefully leave more encouraged than we came. Okay, so let's start with the first question. What does it actually mean to make money work for us, right? Why is it that people feel stuck paycheck to paycheck? And is it actually possible that if we learn like this, we can have some important tools to make money grow? And Ms. Margaret, what are some steps that you think beginners can take, right? So somebody that is here that is maybe still on the edge on if this is actually something that they can do, if there's something that they can do, if they can actually dream about having assets and financial stability. What can you say in terms of that? How can we make money work for us and not feel stuck? And what are some practical tools?
Oh, thank you so much, Dr. Sharon. I love this conversation. It's a money conversation, taking control of your financial future. So really being financially free, or that financial freedom we always long for, or fight for, or work so hard for, it's not something that you have to wake up just one day and everything is just as good as you want it. It's something you build. You plan. First of all, you plan. We will all go to work every single time, but it's not even about how much money you make. Are you making medium income? If so, are you able to save some? Among the money you actually make, are you able to save some for the future, for the rainy day, when you are sick and you're not able to go to work? When that job that you had that was bringing in income is no longer there, you're laid off, or like we can see the economy is not that great right now. If you don't have a job, do you have something saved, the emergency income that can take you a few months before you can secure another job? And something else, we should not really rely solely just on the income that we bring on. If we rely on the income that tomorrow I'll get a check, next month I'll get a check, what if that check does not come in? That is why we talk about financial planning. It's very key. Most of the time when we talk about financial planning, we think about people who are earning a lot of money, six-figure income. That is not correct. Anything you make, every little bit you make, you should be able to set aside some savings, some emergency funds, and some, for example, let me say, for example, you're a mom like myself, your father, or even yourself. You have that job you have, but you do not have even a life insurance. Sometimes when you talk about life insurance, people think about, am I dying tomorrow? I'm young. I'm 20, I'm 30, I'm 45. I'm not going anywhere. But when we talk about that kind of a planning, that is a tool for planning. It does not, that's why they call it life insurance, by the way. It's not a death insurance, it's a life insurance for a reason. It helps you to plan for those uncertainties, for those unplanned events that happen without you planning them. We can plan to work hard, we can plan to invest, we can plan to have children, but we don't plan when something unexpected will happen to our families. So when you have like that kind of, maybe you have a plan, say you have a life insurance in plan, if something ever happened to you or your family, and you hit with a critical illness, a terminal illness, a chronic illness, and you're not able to go to work, you can actually tap into that plan of yours so that your family is not going to suffer, or even you, the insured, you're not going to suffer because you're not able to bring a check in. Or another way, you make your money work for you. You use the system. Let the system help you actually multiply your money. Those are the same systems we're talking about. You're putting money in some stocks for those who love it. You put money in index universal life insurance that protects you. At the same time, it saves the money with cash accumulation, whereby we use a compounding interest to compound your money, to grow your money. So don't put everything in the same basket, like they say. You're just making the check, you're paying bills, maybe just in the bank that earns you 0.00 something. Put your money whereby it can earn you money. That's what we mean by letting your money work for you. So you make the money, but let that money multiply itself by using the systems in place. You do not even have to invent anything. Those systems are there, and that is why we are here to learn about financial literacy and those systems we can use to be able to better ourselves.
Thank you so much. I think that was an eye-opening answer, that it doesn't take a person who is already making too much to have something saved. We can work smart, and despite your income, it's not how much you make, it's how much you're able to save and how much you're actually able to keep. There are people who make a lot. We all know, we have heard of stories where a person wins a lottery and the next year they are very poor, they're homeless. And you wonder how that can be possible, winning like millions of dollars or even $1 billion. So it's very important to have the actual tools, like you said, to protect that income. Okay, so this is a scenario, an actual scenario now that has happened to an actual client. So talking about how important it is to protect income before building wealth. What if somebody actually is going through a hardship in life? Let's say they were working their 9 to 5 and they got a life insurance policy and they were doing a certain premium, but now they get laid off from work, and they are worried, okay, I need to put food on the table and I need to meet my daily needs. And they are thinking about cutting off that policy. What can you tell that person?
Yes, that is actually a very good question, Dr. Sharon, because we do have some, I actually saw some clients in here, people who own the policies, which is actually very good. Thank you for saying that we can't always learn new things. We have even to come back and master even what we have. So that is the good thing. So with the life insurance, we have different kinds of life insurance. We have the permanent life insurance, like index universal life. We have the term. But when it comes to the one that can help you when you lose a job, for example, and you're not able to go to work, that is why we tell our people, these policies are very flexible in a way. Even when you're not able to pay anything, you can be able to keep your policy afloat. How? For example, if you had your index universal life insurance for maybe a year or two, that index account is earning what we call cash value or cash accumulation. That is what we were talking about from the first question. It's earning you money, it's making you money, multiplying your money. So meaning that if I had that policy for a year or two, and the year 2 or 3, I'm hit with a financial crisis, I lose my job, or I get sick, not so sick that I'm able to take out money, I can actually use my cash accumulation to pay for my policy until I'm able to go back and make the payment. You'll be surprised, someone who has been there for only 2 years can even go for the whole year without making a premium. And that policy is going to be still standing intact without being touched. And something else, if you don't want to stop completely, let's say, for example, you're paying $500 a month, and for the few months you're not comfortable, maybe you found a new job which is paying you less, or you're moving, or maybe you don't even have a job altogether, but you have some savings. You can pay what they call non-lapse premium. That is for the index universal life, though. The non-lapse premium is usually a half of what you're paying. If we give an example for a client who is paying $500, they will be paying $250 until they are able to go back and actually start over paying the actual, or what we call the actual premium, or the premium they were paying before. If you're paying $200 and you're now comfortable now to pay for that $200, you can go and pay $100, which is a half of it. So that is why we tell people, don't wait saying that I'm going to wait until my finances are better, because you don't even know what will happen in 1 year or 6 months or 2 years. You better start now, establish that policy, lock in everything, lock in your age, lock in your health, lock in your premium. But if something happens, you can reduce because you have those options. So that is actually why we're always here, not just for the new people who don't know about life insurance, but even for those who have their policies in place, knowing what are my options. Don't feel stuck, because this is your account. Mind you, an index universal life, those are permanent life insurance with the cash in it, it's like your bank. When I feel like I need money, my checking account is depleted, I can go into my savings account. That's the same thing as your index universal life with a cash accumulated in it. You can either go borrow from it, or you can use it, the cash accumulation money, to cover your policy for 6 years without you having to do anything. So for people who are here with your policies in there, don't feel stuck, because we all get stuck somewhere whereby you don't have a job. You're not going to start putting food on your table, on your kids' table, and go ahead by paying just the life insurance, but you still have those cash in there that you can use to support yourself and be able to continue with your policy. That was a great question, Sharon.
So are you saying that somebody can pay half of their regular premium and still maintain the benefits they had?
100%. So how it works with Index Universal Life, for example, it has two components, the protection part and the accumulation part. So when you're paying in like $500, for example, or $200, for example, a big one percentage is going to be the cost of your protection, which is your life insurance. Maybe you have $1 million there, maybe you have 500,000. There is that cost of insurance that is going to be paid no matter what. And then there is that percentage, a big chunk actually, that goes into your cash accumulation. So when you pay the no lapse premium, that means you're actually paying the target premium for that particular policy. So you might not be saving at that particular time because you cut your premiums into half, but at least your policy is intact. It's not going, if you have $1 million, it's not going to be reduced. But at one point, you have to go back and catch up. You don't have to pay back what you missed, but you start up maybe in 6 months, a year, and you continue where you left.
That is really encouraging because it shows that at least the company that you're talking about cares about people. They know that life happens. You're not always going to be able to pay what you started out with, but if you have an emergency, they are able to understand you and allow you to cut back and still keep your locked in benefits. So that is very important. So let's say you got your policy when you're like 30 years old and you had 500,000, for example, in life insurance, and let's say you're now 40 years old, you just or 35, and you just had your first kid, and there are many, bills and unexpected costs. So you can, pull back a little bit for those first 3 months when you're still getting used to that life change, and then come back and you're still going to keep your 500,000. But let's say you decided to stop and completely cancel your policy. You're not going to get the same benefits when you try to come back at 35 years old. Yet you would have gotten if you talk to a financial professional, it sounds like you can get the right guidance so that you can keep your benefits and still go through your life emergency safely, sounds like. So more of the story, please talk to somebody before you throw in the towel, before you cancel things. Okay,
Yeah,
because
just to add on that, Sharon. So that's why we tell people, put your foot out there. Because today we feel like when we educate people about this financial planning, you feel like I can do it whenever I want. Remember, although these companies are looking for clients, life insurance is not guaranteed for you. We have seen people who would really pay anything to get life insurance, but they cannot. They lose insurability. You hit with a chronic, or you hit with a critical, a terminal, and you cannot get it. Or God forbid, you got into something, they even check your credit. They check the people who have like DUI. You cannot even get in, although you have as much money as you have. So get in and lock in your life when it's still good. Because you never know. People wake up today and tomorrow they're diagnosed with something that cannot actually allow them to get that policy. But when you get in, you already put your foot in. Whatever happens tomorrow, it does not change anything for you. Iyo tuvuga taking control of your financial future ni ibintu byinshi nk'uko Dr. Sharon yaravuze, insurance is one tool, ariko twatangiye tuvuga ngo aya wakorera ayo ari yo yose ntugakore uvuga ngo wizeye ngo uzakora ndejo, kuko ntabwo uzi ejo uko uzabyuka umeze. Twatangiye tuvuga ngo niba ukoreye ayo ukoreye yose si ngombwa gukorera menshi cyane. Gira ayo ubika, gira ayo ubikira ejo imvura hagize ikibazo. Na kera abasogokuruza bacu wenda n'abasogokuru bacu barahingaga bagashyira mu kigega ibyo kuzarya mu mapfa, ibyo bita mu mapfa. Ni kimwe n'uyu munsi rero, uyu munsi ntabwo duhinga ariko uyu munsi turakora. Niba ukora rero menya ngo ejo se igihe nzaba ntejeje nzarya iki, washyira muri savings account. Ariko if you need those particular ones, take my number. I'm going to help you get those high yield savings account. zagufasha nibura kubona 4-5% instead of 0.01.
murakoze.
Impamvu tuvuga hano, for example, tuvuga life insurance, nibyo ndi abanyamerika bavuga ngo you kill so many birds with one stone. You pay one premium, you cover yourself and your family, you get savings. When you get sick, you get the money. When you die, the family gets the money. When you live longer, you get retirement savings altogether. That was just one tool, but for the interest of people who don't speak Kinyarwanda, Musabwase was asking, are we talking just about life insurance as a tool, or are there other tools that we can use to save money? So I was telling them, the purpose is to save, to start somewhere, have something. Don't make all your money and spend all of it thinking that tomorrow or next week you're going to make more money, because you never know what tomorrow brings. Always save something for the rainy day if you're not able to go to work. One of those, we're talking about savings, creating some emergency accounts for those days that you're not able to go to work. Find some high yield interest saving accounts that you can use that are not giving you 0.01. You can even put your money into Roth IRA if you not maybe don't have like the one from work, the 401k, because Roth IRA, you put your money after tax. For those ones who have employers who are able to contribute to you, for example, if you want to save for retirement, if you want to make sure that your older age you save, you put your money, you contribute what the company is contributing, but save. Don't put all your money in the same basket. Contribute the percentage they're contributing, and be able to get another account like a life insurance that can actually protect yourself. I always tell my people,
That's really good what you said, because when it's too late, for example, me, it's too late to get life insurance because I have a critical disease, so I cannot qualify. That's what I'm saying. So now that I have a medical problem, it's too late. I cannot qualify. So that's okay. Now I have to figure out how to save the little bit I have. Yes, I may not be working anymore, so whatever I get now, I have to take a little bit to put aside, because now because I have I had cancer, so too late. I cannot qualify for that. So, but for young people, healthy, yes, you said right. Start early before you get sick. After a while, you cannot qualify. You said very well.
Yes, ma'am. Yes,
start early when you're still healthy, because you never know what's going to come down the road.
Yeah, we can't say it better, because that is what we always say. I'm not doing well financially today. Maybe next year, maybe 2 years to come. Mama Musabwase, I don't think you knew that you're going to have cancer for the longest time. You wake up, you go to the doctor, they tell you this is what is happening. So we don't want to get there. We don't want to get there. We want to start as early as we can, when we are still insurable. Plus, Mama Musabwase, there is another product we do offer, the annuities. The annuities, you don't even have, they don't check your medical history. You put a lump sum amount that is going to grow on a compounding interest as well. Your money is safe from the market downturn, but you get your money when you retire. You get your money. You get money for the rest of your life. We can talk about that as well. We have different products actually. We talked about life insurance as a tool.
So you guys are very lucky, because you have somebody here who's telling you. I never had a chance with anybody to tell me. I found out in the 60s, my kids, I focused on my kids, and then I didn't put any 401k or anything, because I was focusing to pay my kids' tuition, then in my old age, I said, oh boy, now what? Then afterwards, it's too late. Now I'm catching up. And then after I had to retire because I got sick, I was forced to retire. So you never know. So you guys are lucky, because you have somebody here, so you clean up your ears, to take the dust off in here, because you never know what happens. So they're telling you the truth. I went through this. I didn't have anybody to teach me. I learned hard way, so, but it's never late. But I'm okay. I'm getting better and I'm well. But please listen to what we're telling you. They're very good advices.
Thank you so much. That is, I don't think you can be any clearer. Testimonies are the best. We can be here and talk all we want, but sometimes it takes a testimony for people to believe. And thank you so much for sharing your story. Okay. Yeah, and these Thursday sessions are free for us to educate ourselves as a community. So please keep inviting people, share the recording when you get the link. We are also going to share the number that you can call if you would like to have a one-on-one session with our expert here. Okay. Do we have any other questions from the audience?
I have a question.
Yes, please.
I'm sorry, I'm not able to find where you can raise the hand.
That's okay. Please go ahead.
My question is, when it comes to buy a life insurance, either for children or parents, which one is more considered like to buy first when while you thinking about maybe depending on your financial how you see this life and you just like maybe I should buy which one is my question is which one is the best to buy for get the kids locked in or the parents should get locked in first?
That's a great question. Like if you had to choose, right? Let's say the budget is tight and you're like, okay, do I do mine or do I do the kids? Okay. So I'll let our guests take it.
Thank you so very much, Regina. That is a very good question. Yes. So our children are very important, of course, no doubt about that. But if you in the fix of choosing, of course, I would say buy for the parents first, because the parents are the ones who takes care of the young ones. Because if you buy life insurance for, say, a 5-year-old and you leave the parents, if something happens to those parents, the children are not going to take care of themselves. So if you have to choose, I would say take the insurance for the family, the older, the adults, the parents, so that they can be able to plan for their children. Because the children, again, remember we're talking about the insurability. The older you get, life insurance gets too expensive. You can get sick and not be able to qualify. Of course, children can get sick as well. Because I was talking to someone who has a child like for 2 years old. They had taken their policy when they were 6 months. Actually, 6 months they took a policy. At age 2, they were diagnosed with, a chronicle that they could have not gotten into by now if they had not taken it. So for taking children early is good because most of the issues with children, they get to see them when they are like 2 years old. When they are babies, you can't tell. The doctors are not going to see most of the time unless it's really very heavy, very severe. But if you can, yes, you can for the children. But if you can't, please go ahead and take care of the parents. Children can come later because they are still young. They can catch up other than the parents who are on the bigger risk. If something happens, the children are going to suffer because they cannot take care of themselves. But again, talk to the financial professional because I tell my people there is no such a thing as little money. Any money, if you work with your financial professional, we can do a needs analysis and find out what fits into the family's budget because every budget, every family has a different financial need as well as they have, again, a different budget. So depending on what the family has, we can look into what they can afford and advise. Maybe the parents can take a term right now, right? Because they are in the stage where they have young children, possibly they just got a home. They need more money, but they cannot afford to have an index for $1 million. But they can have a term for $100 for $1 million for now. Maybe they can start up something, the index universal for their children, and then when their finances gets better, they can go back and get an index. But if you was to choose, you choose the parents first.
I'm reminded of, what they say when you're on the plane. They tell parents, put on your mask first before putting one for your child in case of an emergency. So that's a great answer. And I hope, Regina, that was a wonderful question. I hope that helps. Any other questions from our audience?
Yes, I had a question.
Yes, please go ahead,
So I had
Patrick.
a question for cash value.
Mhm.
So, for example, now it's for tax season. I have some amount and I wanna put there. Maybe in a near future, are we getting more money? How can I put the money on it? Thank you.
Great question, Patrick. That's a very good one, mind you. So Patrick have had his IOL for some time now. So Patrick, so Index Universal Life account, they are very flexible anytime. If you have your cash or you do, you have to be specific. This is going towards my cash accumulation, my investment part. Anytime you have the money, let me know. Actually, mind you, I believe you do have your customer portal. I will show you how to go in and add. You can add anytime. It could be every month if you want. It could be every year if you want. You can always go in and actually put a lump sum into your existing Index Universal account. That is very acceptable. You can do it whenever you want. You can even go into your customer portal and actually do that. But yeah, I'll walk you through that. That is a good thing and it's always there for you. A good option always.
So is that to pull any cards or to just call like the customer service?
No, so for the lump sum or the cash value money, we have an account. We have an account for you. For example, we have the Fidelity account, whereby
Yes.
you go into your bank, you deposit the money on a Fidelity account. You just have to indicate this is for cash value growth, so that it doesn't go towards your premiums. So they will go in and put it into your account, and that one will go towards your savings specifically.
Okay, thank you. Appreciate.
Thank you. Great question there.
Yeah, I think Patrick, you bring up a really good point. You know, for those who are in the US tax season, you're able to get tax return. So this is a time that many people go and spend in restaurants. You get in a 5-star restaurant, hotel, and it's just a time that if we are not careful, we can just blow the tax return benefits. But that was very smart, how Patrick said. How about if you put that money in an account where it's going to grow at a compounding interest, right? You can actually reap 2-3 times more in, the larger amount it is in the compound interesting account, the more it can also grow. Okay, and you can always take it out anytime when you have an emergency. Parents have received a large amount of money for tax return for their child, instead of going to buy them bikes or cars or other things that they may not need right now, you can still buy for them those things, but you're saying a parent can pay a yearly amount at the same time. That way they can forget about it, instead of being on a monthly where some months in the year you may not have enough money. Okay. Thank you so much, Aldit. Any add-ons from you?
Yeah, so I can't really explain better. Jen hit it on the head, really. This child tax credit we get from children, it's not our money, it's for the children. So really, it's like you're giving them that jump start. Put something. You don't have to put everything. They give us the money. We're like, oh, we got the tax return. That money is not meant for you. I think actually our president, President Trump, has a very good initiative whereby every child that was born by 2025, they are putting $1,000 for those children, $1,000 into index account. That shows you how good that is. Yeah, we might be going through a lot of not good stuff, but I was like, that is actually super good for him to think about that. So all these baby Trump children who are born in 2025, they're getting that $1,000 into their index account. So we can do that as well for our children. We don't have to put all the money, but put something for them. If they give you $2,000 for the child, put 1,000 for them. At least you laying that foundation for them. When we talk about this financial literacy, it's not about something we just talk. We have to move from talking and start taking actions. Seriously, everything you put down today, it's not going to be the same 5 years for that child. We have children in this country. Education here, college here can be very expensive. We have a juvenile index for those children. If you start up your child young, by the time they go to college, you won't have to hustle. You won't have to take student loans for them. They can get that money and use it for college. So just because possibly you put 1,000 or two there for them now, when they turn 18, they can get that money out and they use it for college. And if they're lucky to get maybe a scholarship, they can use that money when they finish college to use it for the down payment of their homes, even buying their first car. So it is actually something that laying a good foundation for your children when it comes to that. Like I said, I'm a parent. My children come first. I feel like everything I had to do to get where I am, I don't want my children to start like the way I started, because at least I know better now. Financially, I'm better educated. So I feel like I have to do something so that they can start on a better footing at least. Thank you. That was very good.
Yeah, I really like how lively our audience is. More questions or comments?
Hello, my name is Collins Ntwari. Nabasabwa nimwe mwadusobanurira on that point, yeah, increased limits for exam-free underwriting.
Okay.
Sinzi impamvu mwabivuzeho bikaba byancitse, but I would love to hear more about that one.
Okay, thank you. So Colin is talking about something actually exam-free. That is one of the good thing we have with the company we work with, Fidelity. So actually, someone now can get up to 5 million without having to go through exam, like exam to check your blood or anything, as long as, of course, you have been seeing your doctor. We encourage people. Myself, I do also give people health insurance. Make sure you check yourself on annual basis. You get checked, because for someone with a health insurance, annual checkup is free. You don't even pay a penny. So get yourself checked. And when you're ready to go get insurance, now this great company, Fidelity, increased non-free. So you can get up to 5 million without having to be checked. Even our people who do not have papers here yet, but you do have a work permit. And normally they had to go through a lot of testing because they're not sure about you. Now you can get up to actually 500,000 without having to go through medical checkups. So for all of us who got, for us who got these policies some 5 years back or 6 years back, we had to go through a lot of, examinations to be checked to make sure that you're good. Now technology is really good. So we put in someone's policy tonight. Actually, by the time I finish submitting, they say, congratulations, your client has been approved. Why? Because technology has gone so far. As I enter your information, your date of birth, your social, the system in the background is actually checking. So you don't have to go through medical examinations anymore unless they find something maybe that is critical or terminal. They have to make sure that this is not, of course, this is the life insurance with the living benefits, meaning that if you're diagnosed with a critical or a terminal or chronic, you access all your money. Imagine that. If you have a $1 million policy, and you get hit with a critical illness, they give you a whole $1 million. So meaning that they want to make sure that you're okay, you're healthy before you get in. They don't want to take that chance to give you $1 million or 5 million for now, $5 million product, and then after 1 week you down. So they want to make sure that when you come in, you're healthy. So according on that one, the dollar amount was increased to 500 for non-medical. So you apply now, you get approved tomorrow without having to be checked, and you get a 5 million, up to that 5 million limit of your life insurance for you or your family. And then something
Thank
else
you.
I
So,
wanted to add actually on that, because this company, I can't love it better. Because so we used to have our people, maybe some people who don't have citizenship yet, or who do not have, even young people, they come here, they don't have families here. Now you can put your beneficiary who is back home, who doesn't even have a visa. Your mom, your parents, your sister, your brother, your child, if they are left there, because some people are putting their friends here. But now you can put anyone in whichever country they are, as long as the only thing they send is their ID. If they have Indangamuntu from Rwanda, if they have any ID, that is all they put. And if something happens, they get that money as well. So this is actually, we have so many great news with this company. I can't be any happier, because we used to struggle people putting people friends, because what if you die and your friend takes the money? Your family will never even be able to get it. Now you can put anybody from back home, even without a visa. When something happened, they'll be able to reclaim the money. That was something
that
to
is
add.
wonderful news.
Yeah.
Yeah.
So anyone who had put a friend, we can actually go in and update your beneficiaries to put anyone you want to put from your family back home, if you don't have anybody here. And something else I wanted to add on our people, please make sure that we were talking about the same thing we're talking about our money. Something other than the life insurance. Do not open that, even a bank account, and don't put beneficiaries. Because if anything ever happened to you, and you don't have anybody on your account, that money is going to go. So please make sure, be on your life insurance, be in your on other accounts of yours, like a savings account, even checking accounts, investment accounts. Make sure you do have beneficiaries on there, so that that hard-earned money of yours, if something happens, you're able to go back and reclaim your money, because you never know what happens. You know, you don't want all the money to go. So that is another thing we're talking about, this life insurance, because Sabose was asking, the reason we love this tool, when someone dies, for example, if something happens to me and I have $1 million in the account, in the bank, you know, there's going to be a probate on it. They have to make sure that I don't owe any company or anybody. There is a probate put on my money, although I have a lot of money in there. My family is not going to be able to access. The moment they know I'm gone, the account is frozen, to make sure that they are paying all the debts that I have on me before the money can be released. The money you have, the life insurance accounts, whether you have 5 million or 10 million or 2 million, that is the money that goes straight to your beneficiaries. There is no probate put on that. So we have to think about maximizing our options, making sure that we're not putting all our eggs in the same basket, just in case something happens, because you never know what will happen again. Go ahead, Colin, do you still have your hands up?
Yeah, thank you so much. That's wonderful news to hear. I did not know you can now add a beneficiary who's not a citizen.
Yeah.
But my other question, just to change the topic a little bit, is about the policies. So over the years, if I get a policy today, 10 years from now, your company might have come up with a new policy that's much more efficient, much better returns, much better protection. Is it possible to convert the policies that I got 10 years ago into the newest version of it, like the upgraded version of it today, without changing anything?
Great question there, Collins. So let me tell you something. So you see, when you get your, for example, your index universal life insurance, and today, for example, let's say the Morgan Stanley, the BlackRock, or the gold index, or the S&P, maybe they're on 8%. So it does not mean that you're locking in everything that is in there. The upgrades on those products goes with even the policies in force. That is the beauty of it. So any changes, any upgrades that comes in, Unless maybe a new index is added, you have the freedom to go in and switch. Let me say, for example, if I went in 6-7 years ago and put all my money into S&P 500, now this Fidelity does have a lot of other indices like the BlackRock, the Morgan Stanley. I have the option to go into my portal and switch. So mainly what switches are the futures that makes better these policies, and they go with even the policies in force. So there is nothing to worry about saying that maybe when I came in the indices were like maybe a few, now you can't change anything. That is what we talk about, the flexibility of these policies. You can make changes. We have like those customer portal on your phone. The same way you go into your portal, into your account, your online bank account, and check stuff and change out. It's the same thing for these policies. Everything, all the upper grades, or the new futures that come in, they go into effect and they affect as well the in-force policies as well. Great question, Collins.
If I may just elaborate a little bit. I mean, like structurally, like what is it that is fixed or locked in once you get a policy that doesn't change? Because I was thinking maybe in terms when there's a new version of the policy, you can think maybe they've changed the structure of how you can withdraw money, or they've added new riders that come with the policy, or different things that they can use to create a new product to entice new people to come and buy it. Does it grandfather in the old policies, or once you have a policy, there's some things that are locked in to where if you want the new version, you just have to buy a new policy?
Okay, so depending on what, for example, so when we buying these, when we advise our clients to get these policies, for example, let me say, for example, a client picked a policy whereby they picked maybe, like for the Fidelity, we have like two options, major two options, like the gold option or the freedom option, whereby you say I'm picking a policy whereby I'm using the freedom. The freedom policy normally focuses mainly, it pushes more money into the cash accumulation, and the gold one is like a balance between the two. So if you picked one, that is a different product. For example, those are the changes I would say. If you picked one, you can't just wake up tomorrow and switch. You have to change the account. You have to switch the whole account that you have. But if it's a future, maybe if it's something that is making better those products that we have in force, they are going to affect. The only thing I would say that actually stays like it does not change is your age when you came in, because it's not going to change. Your premiums, if you started off paying $200, you're going to pay $200 for life. It's not going to change. Those are actually, they are locked in. Actually, what I would say that locks in, it is for the client's own benefit, because I lock in my age, I lock in my health, I lock in my premium. That is not going to change. But whatever futures that comes in to better my product, I'm going to gain from it as well. Like maybe, for example, if they have a new, for the many things that tend to change, Collins, are those indices where the money is being saved. Like when I started in this industry, we had a few indices there. Now we have like more than like 10. So now I can go back and be like, hey, I had put my money in the few indices, maybe now we have better ones, I can go back and switch. So most of those futures really can go with the in-force products. Talk to your financial professional, talk to an advisor, or you can even call. People have their booklets with the company numbers and emails. You can even call them and be like, hey, I realized that now we do have Morgan Stanley or BlackRock on this product. Can I switch? If you don't know how to switch it for yourself. But that's why you have an advisor or an agent who is always supposed to be there to review if you have something that you need to review on your account, existing account, to see if there are some changes that should be made on your account. So most futures really, they come in and they update existing accounts as well? Great question there.
Thank you, thank you. So we kept talking about contacts. So let me just share some where exactly you can contact. Just a couple of numbers. There's obviously more professional agents, but these are just some numbers that you can contact. So again, we have talked about different things in this conversation. This was a money conversation, sharing different tools and tips on how we can protect the money that we make while we are still able to make it. We've talked about how you can use those tools for yourself, for your family, for your children, and how you can actually lock in low rates today while you're still healthy and probably making, good money. So how can you protect it so that when you're not able to, this can come in handy? We've also talked about different living benefits for people who have certain tools like Index Universal Life Insurance that has the savings that are indexed, meaning that they grow at a compounding interest, which is much better than keeping it in a savings in a bank. And where if you did get chronic critical terminal illness, you can access that money without waiting to pass. Okay, so these are some contacts that you can call to get a free consultation so that someone sits with you one-on-one to see your needs and where they can, advise you accordingly. Okay, so please reach out, accordingly, 817-808-4597. Okay. So that's the first number. For some reason, if this one is busy at the time, feel free to also call 713-391-094. And these are +1 numbers. Okay, so plus +1 for anyone who may be outside. Okay, any questions? Yes, Nema.
Hi,
Nema,
Michelle.
you have
Thank
a
you so
question?
much. Yeah, can you hear me?
Yes.
Okay, thank you so much for the presentation. Well done. Is there any way you can put those numbers in the chat box
In
so
the
we can,
chat for sure.
yeah, so we
For
can
sure.
copy them down.
Okay, I'll ask our main guest whose first phone number is here to put it in the chat.
Thank you
And
so
feel
much.
free again. Thank you, Nema. Your consultation is free, so use these free opportunities so that we can all learn and grow together as a community.
Yes, thank you.
Thank you so much, Nema. We are getting to the close of our conversation, so we like to respect your time. These sessions are here every Thursday, so please keep coming. We have different topics every week. Invite friends and family so that we can all, grow and learn together. Okay, so as we wrap up, I'm going to give, we've put the number in the chat, okay, for Miss Margaret Businja, so please feel free to reach out. She also has a working office. If you're ever in the Dallas-Fort Worth area, you're welcome to come in. Her or myself, we are happy to organize a Zoom one-on-one meeting with you too, so feel free. Okay, so I'm going to give our main guest for today at least 2 minutes to give us any last words. So I'm going to maybe phrase it more like the closing remarks here. What is one thing that you can advise somebody here that is listening? What is one thing that they can do this week? Not tomorrow, not next month, not next year. What is something they can do this week to take control of their financial future?
Thank you so much, Dr. Sharon. This was great. The only thing I'll tell people, and I tell people all the time, take action today. Today, don't keep saying that I'm going to do something tomorrow, next week, or next month, because you never know what tomorrow will bring. So take an action today. And don't wait for saying that if I'm going to save, I'm going to wait until I get a big job that pays more money. Or if I'm going to buy that protection policy, Index Universal Life, or even a term, I'm going to wait until I'm able to get $1 million. Start small and grow as your finances grow. Every family, every individual has a different financial need, and yours is not different. So take a step today and grow with your capability, with your financial capability, or with your need. So that's what I can say. But remember, save something for the rainy day, because you never know what tomorrow is going to bring. So that is what I can say. Always, we are always here every Thursday. We have different speakers. We cover different topics. We are here for you. This is a community crusade we are on, and we are not charging anyone to come and learn. So come learn with us. Share the topics you want to hear from. You can pick a topic, if you want to talk about savings specifically, we'll come here and bring some professionals, because we have professionals who are bankers, to come and show you different ways of saving your money. If you want to talk about, you want to plan and get a home maybe in a year or two, will help you to plan that. So this is a financial literacy and money matters, not just one topic. And we have professionals in all different sectors. So never miss, same link, same time. Always try. And something else will always help people in this team. We help people actually help you get an extra income. If you're really making a minimum wage and you feel like you have extra hours you can put in, we can guide you into actually creating a job, creating a business for your own. Because adding extra $1,000 on a monthly basis or 2,000, can that actually help you be able to protect yourself? If you're that person who is looking into making better money or increasing your money, getting a side hustle, get a side hustle. Reach out to me. I'm going to help you how to get that. Let me tell you, we live in a country whereby there are so many opportunities. We have 24 hours in a day. Why work 8 and live 6? What do you do with 16 hours? Can
I'm
you
telling
put
you
aside,
tomorrow.
can you put aside 2 more hours to be able maybe to create something for yourself? We are here, we help people actually create their own businesses. That is a part of what we do. We don't just sell, we teach you how to become an entrepreneur, live that employee mentality, and move into whereby you can actually become your own boss. You know, you can bring in more money and be able to actually achieve what you want to achieve. Because if you're doing a minimum wage and you're not making anything better for yourself, it is going to be tough for you to be able to make ends meet. But you have time, we are here. Come, we're going to hold your hand, guide you through, show you how you can actually make extra money. We have the system. The system is there to guide you through to be able to earn extra income for yourself and your family. So let us take Nema. I think Nema had a hand again. Thank you so much. That was good.
Now you're talking.
Go ahead, Nema.
Oh, Michael, you did so well. I really like the way you answer that last question. And the only thing I wanted to add is probably just a suggestion about getting educated financially. If you're saying that your rent is 2 times your salary, maybe you should moving because because that's not very wise when it comes to finances. I would suggest, if you like to read, there's this book that I just finished reading. It's called The Millionaire Next Door. It just gives you some wise, steps to take in order for you to be able to be stable financially. But I'll say that what Immaculate told us is very important. If your income is not enough, create another opportunity. Take opportunity that's out there. Like he's offering to call her, that's very, very generous of her to give you that opportunity to teach you in ways to increase your income. That's all I have to say. Yeah, by reading, there's so much information out there that can help us.
For sure. And this is a good space to share those resources, So, I mean, it's always tight when we're getting to the end and ideas are definitely coming by, but please feel free to share in the chat, call afterwards, come back so that we keep growing together. So let me do now a summary of just to wrap up everything that we've talked about here. So in closing, during this conversation, we talked about three main themes: how we can protect one's income to then help you build stability and later on grow wealth as that income that started out small grew at an indexed or compound interest. So we also, the key takeaway from our guest was that you don't need to have everything figured out right now. You just need to start. And there are people who are willing to be mentors and to hold your hand so that you can get to that place where you feel like you have a stable financial future and even present. So I do want to thank so much everyone who joined us today, who contributed their thoughts and asked questions. And we wouldn't have had the conversation that is lively without you. And most of all, I also want to thank our wonderful speaker, Ms. Meklet Businja, who answered your questions. So if you do think about something else later on, you're welcome to come back, call the number that was shared with you. And then until then, we'll talk to you next Thursday.
Thank you so much, everyone. Have a blessed evening. See you again next Thursday. Look out for the recording.